Okay, so when you think about who really controls the global economy, what comes to mind? You probably picture these Wall Street titans, making these high-stakes, dramatic deals. But what if the real power isn't held by the people we see on TV at all? What if it's held by the invisible architects who are quietly writing the rules for everyone else? Let's pull back the curtain on this hidden power structure.
Let's start with a number. A really, really big number. $20 trillion. I mean, it's a sum of money that's almost impossible to wrap your head around. And this single figure, it's at the very heart of a huge global misunderstanding about who truly pulls the strings in the world of finance.
So that 20 trillion, it's the combined assets that are managed by just three companies, the big three asset managers, BlackRock, Vanguard, and State Street. And because they oversee such an incredible amount of the world's wealth, it's easy to think, yep, these guys are the ones calling all the shots. Deciding the fate of companies, maybe even entire countries.
But here's the thing. Are they really? What if I told you that for all their massive scale, these giants are mostly just following orders? And that question right there is where the real story of financial power actually begins.
Right, so this brings us to what you could call the great misconception. This idea that the firm managing all the money is automatically the one with all the power. We're about to see why that's just not true anymore.
And this quote, man, it just nails it. The big three are fiduciaries. Now that's a legal term, but it basically means they're required to act in their client's best interest by following a very strict set of instructions. But, and this is the absolute crucial part, they're not the ones who wrote those instructions. Okay, so if they're just the followers, then who the heck are the rule makers? Well, to get that, you got to understand this huge, fundamental shift in how investing actually works today.
Think of it like this. Back in the day, everything was active management. A human portfolio manager was the star of the show. Their whole job was to use their brains and their gut to try and beat the market. But today, we live in the world of passive management, and it completely dominates. And here, the key player isn't a person at all. It's the index. The goal is no longer to beat the market, it's just to perfectly track it. And all the decisions are made by an algorithm.
And this has led to this really important concept called passive obedience. And look, this isn't just some clever strategy. It's a legal contract. It's binding. So when you buy an S&P 500 ETF from a company like BlackRock, they are legally obligated to follow the rules of that index to the letter. So if the S&P 500 index boots a company, BlackRock has to sell its shares, period. Doesn't matter what their own analysts think, they have zero choice in the matter.
And what you get is this total power inversion. The asset manager, your BlackRocks and Vanguards, they provide the scale and the plumbing. They're like the warehouse. They handle all the massive funds. But the index provider, and we're talking about firms like MSCI and S&P Global, they provide the intelligence. They're the architects. They're the ones who write the rules that all 20 trillion of those dollars have to follow. And believe me, this power is not just some theory on a slide. It plays out on a global scale. These index providers are basically the gatekeepers of all international capital.
You can almost think of them as a de facto financial UN. Seriously. They're the ones who get to decide which countries are investable and which ones aren't, which effectively determines which nations get access to these massive, massive pools of global investment money.
So what does this actually look like in the real world? Well, an index provider like MSCI will review a country's market. If they decide to classify it as an emerging market, for example, then boom, billions of dollars from all those passive funds are automatically forced to flow into that country just to track the index. This is exactly what happened when MSCI started adding China's A shares to its big emerging markets index. A single decision by a small committee can literally change a nation's economic destiny overnight. And this power has gotten even bigger with the explosion of ESG investing. That's environmental, social, and governance. Now, these index providers get to decide what good even looks like. They have the power to just purge companies with low social scores from their popular ESG indexes. They get to decide which companies meet their definition of sustainable. They basically become these unofficial regulators, setting standards for corporate behavior that companies feel they have to meet just to stay investable.
So you're probably wondering, how did this business get so powerful? Well, let's take a quick look at their business model, because honestly, it's a fortress.
They've basically built three moats around their castle that are almost impossible to cross. First up, the licensing moat. You can't just launch an S&P 500 ETF without paying S&P Global a nice licensing fee for the brand name. Second, the data monopoly. They own all the proprietary data and the secret sauce methodologies. And third, the switching costs. For a giant like Vanguard, trying to switch from one index provider to another would be a logistical and financial nightmare. And the result of all these moats? It's just
insane profitability. While the asset managers who follow the rules are stuck in this brutal price war, a race to the bottom, cutting their fees to practically zero, the index providers who write the rules are often just casually pulling in profit margins of over 50%. Think about that for a second.
So what's the big takeaway here? It's that our whole picture of who holds financial power is it's outdated. We need to start paying attention to the real architects of our new 21st century economy.
So let's put it all together with one last analogy. You've got BlackRock, Vanguard, and State Street. They are the custodians of the vault. They guard an absolutely immense amount of money. But it's MSCI, S&P Global, and FTSE Russell who hold the map. They're the ones telling all that money exactly where to go. And really, when you boil it all down, it comes to this simple truth. In a system that's more and more driven by passive, rules-based investing, the power doesn't belong to the biggest player. It belongs to the one who writes the rulebook.
Which leaves us with one final, pre-critical question to think about. We have built this incredible global financial system that runs on automated obedience. So, in a world that increasingly runs on these automated rules, what does it mean when the handful of firms writing the rules are, for all intents and purposes, invisible?